Hello and welcome to yet another episode of the CNBC-TV18 Market Cafe. I'm your host, Surabhi Upadhyay. Remember, this is our show. It's a digital-first property and it's a show where we talk markets, we talk money, but we do that with a little bit of ease. We take a deep breath, we step outside the studios. I'm not in the studio right now, as you can see. We sit down, grab that cup of coffee or tea, whatever our guests like, and really go in for an in-depth conversation. But as I said, at ease. Remember, in the last episode, you heard from Gautam Dugar of Motilal Oswal Institutional Equities. Gautam is someone who's sort of very deep into institutional equity research, and he gave us some great insights about the connection between stock markets and elections. If you haven't caught that episode just yet, I suggest you go on our YouTube channel and do so right away, because there's some very interesting sort of stocks and sectors that he speaks of as well. Now, today we speak to you at a time when the market has finally touched that milestone. 20,000 on the Nifty has happened. The question that a lot of people have on their minds is, what next? मैं अपने stock बेचूं कि नहीं बेचूं कि profit booking करूं और mutual funds, should I add more, stop my SIP, continue my SIP, buy more PSU? What to do? And there's always that fear, right? That fear of heights. That, oh my God, all-time high. Will this market fall now? Today, our guest on the show, the person that I'm going to speak to, has been doing this for over 25 years. He's got so much experience. And you probably know him already. I'm very certain of that. He needs no introduction. But anyway, let me tell you about him anyway. My guest on the show is Nilesh Shah, the MD of Kotak Mahindra Asset Management. Nilesh, it's a pleasure to have you with us on this show.
Thank you.
This is your debut edition of the CNBC TV18 Market Cafe. Thank you for joining in.
My pleasure.
So, welcome to the office. Today, as I told our viewers, I'm not taking you to the studios. Are you okay with that?
I'm fine.
I'm not going to ask you about the stock ticker, about what is happening with the Nifty now. None of that is happening today.
Thank you.
Works.
But works.
The effort is to try and humanize, the stock markets and the way we cover them, because I firmly believe that it can't be rocket science. It's money that you're trying to build a wealth corpus over a long period of time. So it can't be that difficult, right?
Market is all about common sense, which is unfortunately not so commonly available.
Brilliant. But before we get started and before I take you to the cafe and we'll sit down, I know a fair amount of this, but I want our viewers to know as well your journey and 25 years plus with the Indian capital markets, right?
Yes.
And a huge period of that with, I think, Kotak Mahindra.
Yes.
And before that, I think even with the ICICI Group.
So I started my career in ICICI Group, lucky to be groomed over there. And then traveled to Templeton and Axis.
And that was the early 2000s. I'm just trying to understand the map of the country and the economy also back then.
So I came in a market where, there were words like Jota Fatak, Patawat, Wandho, all kinds of things.
Even I don't know what they mean now.
I have seen markets getting shut down because of payment crisis. I have seen brokers always selling at the top of buying at the top of the market and selling at the bottom of the market and calling it officially, Wandho or
buying at the top and selling at the bottom, huh?
Yeah, no matter what you sold, it was always at the bottom of the day. And no matter what you bought, it was always at the top of the day. And this was officially known as Garo, the difference.
Oh.
So from the Wild West to come to this market where everything is electronically settled, I think the regulators have done a great job in safeguarding our market.
I think, you folks have played such a huge part in educating investors. I think that much common sense everybody has, that you don't sell at the top, you don't buy at the top, and you don't keep selling when there is a bottom. We need to do the reverse. We know that much. The question is, how do we do it? How do we, prepare ourselves for these bottoms and these tops? Because we don't know, what is what.
So one is the financial awareness. Moment you realize that it's difficult to capture the bottom or the top, you are aware about it, and then you don't start chasing it. The second thing is a simple tool of systematic investment plan. Today, there are more than 15,800 crore coming by way of SIPs.
That's the last monthly number. Phenomenal.
There are a host of people who have built their financial security through SIP. I think India is a rising tide. Every boat here will get lifted unless until they have a big hole in
the boat.
and just do SIP. That will provide financial security.
Okay, that's lesson number 1. Avoid boats that have a hole in them. You need to be aware of how to identify those boats. Okay, before we get started on markets full throttle, Nilesh, we have to take you to our cafe. So please tell me, what is it in your usual day? What is it? Are you a green tea person, coffee person, water person?
So normally I tell the host, whatever is best in your place, give it to me.
Oh, okay.
And that has worked well. I can drink green tea, I can drink black coffee, I can drink cappuccino, I can take masala tea. And moment you put the onus on the host,
It's
give me the
problem.
best. They deliver the best.
Okay. So, I think I'll go with my choice. I'm very much a coffee person, especially when I'm in a good mood, which I am with your company. So, I'm going to get you cappuccino. Does that work?
I'll join in.
Okay, let's go. Cappuccino coming right up and we get our conversation started. Please have a seat and coffee will be served shortly and I can assure you it'll be good coffee. Because I've had it before, like you said, right? The onus is on me. So therefore. So Nilesh, tell me, how has it been these last couple of days? This 20,000 euphoria, just ahead of Ganesh Chaturthi, the festive season in Diwali. What's the buzz? How are you guys feeling? Happy and excited or a little overwhelmed because expectations are, I'm sure, rising higher?
So I think we are a little bit overwhelmed.
Okay.
There was a time when we used to tell and request people to be bullish on India. Growth story of India is good. Now it's the other way around. People tell us that don't get bearish, India growth story is good.
Is that a worrisome sign when investors are so euphoric and think everything is gold?
So I think this time there is Triveni Sangam of flows, sentiment and fundamentals.
Flows, sentiment and fundamentals. That's good to know.
Our earnings are growing at about 1% every month. So it's not that fundamentals are way behind. Domestic and global, both investors are willing to buy. And sentiment towards India is like Birbal ki kahani. We have done well, but others are doing badly. So our line looks bigger. So with this combination of flows, sentiments and fundamentals, I think investor confidence is justified. Thank you.
Thank you. Thank you. There you go. Please see. Check it.
I'm sure it is good.
Why don't you take a sip and then we'll decide.
Yes, it's a good coffee.
Okay, great. Well, cheers to that. Yes, sorry, you were saying. Please continue.
So this combination of flows, sentiment and fundamentals do justify investor confidence.
Now, given that you yourself sound fairly optimistic even at these levels, I could ask you about the 5 things to buy. But today, as I said, the topic is the 5 things to not do in this market. The reason I'm asking is maybe one of those 5 things can be don't not participate or don't sell. That could also be one of the things. But you tell me, at 20,000, the 5 things investors should not do in this market.
So first, don't think last 6 months will get repeated in next 6 months.
Okay, keep your expectations little anchored.
Moderate and low. Last 6 months was luck. Now you have to make money on your skill.
Okay.
Second,
that's an important one, guys. Did you hear that? Please hear him again. He's saying last 6 months were luck and the next 6 months will be skill. Your skill, your fund manager's skill, basically pay attention. That's the first lesson. Okay, please continue.
Second, this is not the market where I'll recommend people to leverage.
Okay.
Leverage returns have been fantastic in last 6 months, but now not the time to leverage. Third, this is time to clean up your portfolio. So don't buy kachra stock, buy quality.
Okay, so I'll just repeat, going a little slow. Second is don't leverage, basically don't borrow money and then invest it in the market. And the third is it's time to do house cleaning.
House cleaning.
Kachra saaf karo, safai abhiyan before Diwali.
Absolutely.
Okay.
Bull market mein sare paap dhul jate hain. So this is time to clean up all your non-quality stocks.
But okay, on that, do you think that in this rapid rise, right, March onwards, April se sari kahani palat gayi, the moment this financial year started, do you think people or funds for that matter have accumulated kachra? I mean, has there been an issue of quality in this rally going up to 20,000?
So we have learned our lessons in 2000 and by and large avoided kachra stocks.
Okay.
But in the market, there are many stocks which have run up way ahead of their fundamentals. Second, the valuation also one will have to keep in mind. Today, a lot of people are buying what is moving fast. I think it is time to look at valuation. Don't buy things based on tips. Buy based on your conviction. Because when markets correct, it's your conviction which will allow you to hold on to those stocks.
Okay. So number one, keep your expectations realistic. Last 6 months won't repeat exactly in the same way. In the next 6 months, do not borrow money and then invest in the market right now. And third, it's time to clear the kachra. That's 3. Now,
fourth, do your research and invest, not just follow someone's tip.
So the fourth thing is do not follow tips.
Absolutely. On social media, there is explosion of tips.
Please
Please stay away from it.
Yes.
Other than your parent, no one is interested in making you wealthy. So please, don't get trapped into tips.
So do not follow tips. That's number 4.
And finally, don't chase momentum. A lot of people are playing momentum investment. People are going into F&O and trading. I think this is time to curtail your trading instincts and take some profit out for longer term investments.
In F&O trading, a good friend of mine met me after many months and he said, Surabhi, there's no use having a friend like you. I said, why? What have I done? And he says you are doing the stock market business. You're covering it for years and years. You've never told me. Are you into F&O trading? I have recently started. And tell me some ideas, some strategies. I said, with folded hands, I said, my friend, maybe you are going to be the master here. I never have, never will, because I never can understand that. But it told me something, Nilesh, and that's where I got scared, because he's someone who's a regular investor with a day job, who definitely has money in mutual funds, maybe has money in your funds as well. But we've also seen after COVID, this era where investors think they can become better fund managers, think they can become better traders. What's your view on this? A lot of it is because of the easy DIY, the zero discount brokerage platforms, and it just seems very easy. What would you say to this trend? Because we can't wish it away. It is real, let's face it.
So one, there are periods where there's a broad-based rally in market and whatever you buy makes money for you. As a trader, you feel that this is easy way to make money. But please remember, 89% of people who traded in F&O ended up on the losing side.
This is SEBI's data, right?
This is SEBI's own research, and only 11% made money.
Yeah.
If you are an investor, 89% makes money, 11% loses money. Do you want to play the game where the odds of losing are 1:9 or where odds of winning are 9:1? So my recommendation is that whenever you hear trading, do remember the statutory risk factor. Trading is injurious to ordinary investors' financial health.
Okay, so keep that in mind in case you are feeling this compelling need to go out there and become this, new age trading maverick. Probably want to keep some of those sort of risks in mind as well. So we've discussed the 5 things that you said people should not do, and the 5th one was not chase momentum. And Nilesh, here I think I want your advice more because I think that might be the hardest right now. A lot of people say that the sectors that have started doing well in this rally, these sectors haven't worked in the last 10 years, right? We're talking infrastructure, we're talking power, we're talking PSU stocks, for heaven's sake. I mean, in my career, and I've been doing this for 15, 16, 17 years, I never thought we'll see these kind of levels. I mean, the stock like NTPC has crossed its 2008 high. I thought I will retire. I thought मैं NTPC की उतनी high कभी नहीं देखूंगी, but it has happened, So there are people who say that you need to prepare yourself for what is maybe a completely new blue sky territory for some of these areas, industrials, PSUs. But at the same time, like you're saying, we shouldn't get carried away with momentum. So how to balance?
So one, on the power stock, we are bullish. The power utilization or capacity utilization has reached its peak. And we are actually staring at a scenario where power rates will have to go higher. But on many PSUs, we have seen that the floating stock is very, very limited. There's no divestment supply. And prices are running up because there's no supply. Tomorrow, when the government begins divestment, there will be supply and PSU stocks will come down. So don't invest because there is momentum, because there is limited floating stock. invest because you believe in the fundamentals.
I'm not letting you have your coffee. Please go ahead. I'm, asking for all of this advice, but then what to do? I mean, it's just that kind of a market. What's the mandate? Like, do you have a mandate that you give to your fund managers? For instance, if they're sitting on X amount of gain or Y amount of gain, or let's say if, some of the infrastructure funds that might have done really well, is there a mandate that you have to book profits if you've done 50% chal gaya hai stock, to aapko book karna hai? How do you navigate this?
So,
I mean, again, playing momentum, retaining the gains, but yet also not getting carried away. How do you apply that to your own funds?
So in our funds, we take a longer term view, never a shorter term view.
Okay.
And we move from a company to another company only when we believe valuations have become expensive on a longer term basis. And there are cheaper alternates available. See, out of 500 odd stocks in the market, about 100 odd delivers return. So your success ratio is 20%. When you have got a winner, why let it go? You make money by letting your winner continue and cutting your losses. Most people end up cutting profit and letting losses accumulate.
That's the hard part, right? Realizing which is the horse you keep backing. Let
Absolutely.
the horse run. And which is the one where it's time to kind of get off and then,
Absolutely.
start getting it, getting a little easy. Okay, so let me ask you that. Which are the horses which will keep running, you think, in this rally? And which are the horses that it's time to now jump off?
So one is manufacturing.
Okay.
Thanks to China plus one, a lot of global companies are looking to diversify their supply base. Any Indian company which is servicing local market and which can become part of global supply chain management will have, let's say, double engine ka growth.
Okay.
The second sector where we are extremely bullish is power. Utilizations are peak and there is huge demand and power rates will go higher and higher.
That's really interesting that you say that, because power was considered like a dog of a sector, right? Very sort of pedestrian 4-5% sort of growth. I remember back in the day, it was not an exciting or a hot sector to speak of. You think that's going to change?
Yes, because now there is demand for power and the supply is getting constrained. The newer capacities will come over a period of 5 to 6 years.
Right.
So in the meantime, power companies will have better realization.
Okay.
We also believe ahead of election, government puts money in the pockets of consumers and the consumption basket also should do well.
Okay.
Now here the only concern is monsoon. In the month of August, FMCG volumes have actually registered negative growth thanks to destocking at the stockist level. So subject to monsoon, I still think consumption stocks will do well ahead of election cycle.
So that's manufacturing, power and consumption. 3 horses that you think still have the stamina to keep flying ahead in this rally.
But within that, buy quality, buy reasonable valuation and buy for long term. There is a red signal in market for all micro caps, mini caps and SME exchange IPOs. I think their prices are way ahead of fundamentals. Some of the mid caps and small caps also are looking a little bit expensive. So please think of buying quality, long term and reasonable valuation.
Okay, I think that's really sane advice and you're hearing it from the man himself. I mean, he has been in this industry for so long, so please listen when experts are giving you that piece of advice. On consumer, I just have a follow-up question. This whole trend that arose after COVID, that there's a lot of consumption and expenditure on the premium end. But we see FMCG companies, a sabun, tel, shampoo wala company, they're still doing 4-5% growth. They're struggling with, those kind of volumes. So within consumer, are you looking at playing this? Play the urban consumer, the rich consumer, and don't look at sabun, tel, shampoo. Or could that also change? I mean, in the medium term.
There is a K-shaped recovery post-COVID. The upper middle class and rich are enjoying growth far more than the lower middle class and poor people. And within that, there is premiumization happening. My favorite example is that 1% of Indians enjoy lifestyle of French citizen. About 25% enjoy Indonesian lifestyle. And rest are enjoying sub-Saharan Africa lifestyle. We have to keep on migrating people from Africa to Indonesia and Indonesia to
Paris.
Now, journey of African lifestyle to Indonesian lifestyle is going to be far more then people moving from Indonesia to French.
Okay.
And hence, mid-market premiumization is the theme to play on. Pehle roti kapda makan was the basic necessity.
Correct.
And
Now
which
everybody
is
has
where
that.
all those things work.
Yeah.
Now, if you are getting incremental money, where will you spend? You will spend on entertainment, you will spend on travel and tourism, you will spend on healthcare, you will spend on education. So, where incremental money is going to be spent in this sectors, this is where you will find opportunities.
Okay, got that. I now want to talk about what you see as the biggest red flash or the biggest risk. You mentioned micro caps and small caps. You want to elaborate on that, and beyond that, what could be the biggest risk that people need to keep in mind?
So I think there's a lot of complacency in micro cap, mini caps and SME exchange, where thanks to limited floating stock, prices have run up ahead of their fundamentals. And many people believe whatever is moving higher will continue to move higher. That complacency is not good. I think we have Triveni Sangam of flows and sentiments and fundamentals, but there are certain zones in micro caps and mini caps where prices are ahead of fundamentals. This is where one needs to exercise caution. There are events like higher oil prices, like monsoon, like election, which could have an impact on the market. Be ready for correction. Don't assume that markets will continue to rise in a straight line.
We're coming to the final sort of leg of the conversation. So therefore, I want to ask you a couple of simple questions, like a bit of a rapid fire maybe. If you were to put in your next 6 months' salary into any particular financial product, what would it be?
So I'll be putting into asset allocation fund.
Okay.
This is where I outsource my asset allocation requirement to a professional fund manager.
Okay.
This is one category of fund which is likely to become extremely popular. So just blindly put money into asset allocation fund.
Asset allocation funds. All right. Again, let me ask you, your 1 month salary you have to put in a mutual fund. Will it be an active fund managed by an active fund manager, or would it be a passive fund on, Nifty, Sensex, any of the indices?
So as long as the fund manager is adding value to me by outperforming indices, it is active. The day I realize that no, there will be no value addition, I'll go passive.
You suddenly get a bonus of, 3, 4 crores or 5 crores, whatever it takes to buy a house in the city of Mumbai. So basically you get this big bonus corpus. Will you go and buy a house?
So if I don't have a house, undoubtedly I will go and buy a house. There are people who can stay on a rented property, and I've stayed there for 15, 20 years. But ultimately, ghar apna ghar hota hai. So undoubtedly, if I don't have a house, I will go and buy a house.
Once you're in that house and you're done with your day, your office time is over, how would you unwind? How do you unwind?
So nowadays, thanks to Netflix and Amazon, you can watch out some of the amazing documentaries. And there are days when you don't want to watch a television, then there's always a book available. I'm still a physical book reader. I haven't graduated to Kindle. But the best way to unwind is by reading some book.
Nice. Which one are you reading now? Let me ask you, if you're reading something at the moment.
So I have been reading some of the books which has been gifted to me by, some of our distributors who have written on financial planning.
Okay.
So very recently, I got a book on financial planning. If God was your financial planner.
Oh, wow.
So I'm going through it right now.
The title itself has got my interest. I think I'm going to take some notes on this after our conversation is over. And last but not the least, if you could go back in time and if you could go back to the 90s when you were just finishing college, what advice would you give to your 21-year-old self? And if you could do things differently, if at all, what would you do? If you go back in time, Nilesh Shah, 21 years old, what would you do with life?
So I'll give the same advice which I got from someone. In those days, HDFC Bank was doing extremely well. And as a fund manager, I wanted to go and find out next HDFC Bank.
Of course.
And that's where my boss told me.
Even today, everybody wants to know the next HDFC Bank, right?
Yeah. But that's where my boss told me that, look, HDFC Bank itself is creating new HDFC Bank in 3.5, 4 years. Why do you want to go and find another HDFC Bank? Invest where it is already happening. So I'll give advice to myself, buy quality and just stay invested.
Okay. All right, Nilesh, it has been a very, very nice conversation and a really enjoyable one. I have to thank you for coming out, taking out that time and being with us in the Market Cafe today.
Thank
Hope
you.
to have you back often, more frequently,
Definitely.
and have more of these sessions. Thank you so much.
Thank you.
All right, viewers, hope you found that interesting and informative and fun. I surely did. Remember, you can catch us on YouTube, check out all our episodes, and we are going to be back very, very soon with one more such engaging, interesting conversation. Catch you over my next coffee.